Hey there, everybody. It's Bob with Trade Genius. I have my good friend Phil with me. Phil, I'm calling the top August 15th. Phil's going to explain why that's possible. Stay tuned.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Okay, Phil, we're going to get unimaginable highs coming up here between now and then. And then I'm predicting we're going to have unimaginable lows. And we have data to prove this. What say you?
Yeah, I think it's going to be a bipolar market to say the least, and probably at extremes that we've never seen before. But let's get into the information here. This is the 90 plus day FHA mortgage delinquency chart. So what this means is that this number going up vertically here is a number of new 90 plus day loan delinquencies, and the reason for them is unemployment. So it doesn't mean for other reasons. This is strictly unemployment delinquencies. These are now 90 days. And the rate of change here, 11%, this is really starting to crank up and even making the great financial crisis look tame in comparison, which is quite something because that was a major, major housing crisis. And that's not really a theme that we have going into potentially the recession here. This is very telling to me. So I think what that tells us is that what we've been talking about, we have to keep an eye on jobs and things like that. The jobs numbers probably aren't anywhere near accurate that we see. Again, the institutionals, though, are programmed to operate off those numbers. The government knows that as well. So you're going to see some monkey business with that. But you can't hide this stuff, So delinquencies, I think, is a big red flag here, Bob. The one thing that is interesting, if we go over to the unemployment chart, which ties directly into this, you'll notice that as we get into a recession, right, we kind of have these rounded bottoms on unemployment. This is a monthly chart, so we definitely have a rounded bottom going on here. Now, in terms of timing, what does that mean? Well, you can slap an RSI on something like this, and that actually shows you momentum, the speed in which RSI cranks up. Also, too, what is really consistent is when the RSI hits the middle of the range there, that 50 level, that tells you that you're about a quarter out from a recession. And it's very consistent like that. I circled all the times that we did that, and a quarter, maybe 2 quarters, but between 1 and 2 quarters, you are in a recession. And here we are at a reading of 46.5 basically, and 50 is right above us. So in my mind, if I'm being objective here, we are 1 quarter, maybe 2 quarters out from a recession. And I think that when you have a chart like that FHA 90 plus day delinquency because of unemployment, no other reason, I think that it confirms that this is coming. So that's the way I view this and where we're at right now, Bob.
Yeah, and the way I'm looking at the numbers is that I think this quarter, probably they're going to hit their earnings estimates for this quarter. And we know that the fourth year of a presidential cycle, April is choppy, and then May, the bull takes over again. And it's kind of coinciding with there seems to be a consensus forming around people that usually aren't wrong at these forecasts saying that the Fed may actually lower interest rates in May. And if they do that, that would probably be the catalyst for an initial blow off. And we know that reduction of interest rates eventually turn into a market sell-off. So my view is that they're going to be worried enough coming out of the second quarter, first quarter earnings reports to give a little bit more liquidity to the second quarter reports. And then from there, I don't think they're going to be able to hide it anymore. Look, you have entire sectors of the economy shutting down. You have the 99-cent stores are completely gone, Phil. They're closing every single store. There's no margin in it for them anymore. Inflation is killing them from the supply chain. Their customers are killing it from the buy chain. And then you have Dollar General, the same thing. So you're starting to see absolutely this is what I call an inflationary depression, when prices are rising at the same time sales are going to start to falter. And I think that, by the time we get into August, I think it's going to be apparent to everybody. And August is a month where a lot of bad things happen. A lot of people always worry about October. August has some nasty surprises in it for people. So I'm saying, August will be the top. I'm saying if they cut in May, we're going to get some sort of liquidity blow-off event so that the big money can continue to sell to the dumb money, and then this party's over. And I think the next 2 years after that are going to be hell on earth.
Yeah, I think we get that top in August, and it could even be July. I think it persists down into September, and then in September you get your pre-election rally, and you get a pretty good rally into November. But once the election's over and we got whoever for the next 4 years, reality sets in, and we're going to get another wave down. And that's really, I think, where it starts in earnest, this bear market. So again, jobs and all that stuff has to confirm, but I think we have enough data now to know that it's coming. It's just a matter of time.
Yep. Be prepared for winter. Start buying your coats when they're cheap in the summertime.
Yeah. All right, guys. Well, let us know your thoughts on today's episode. Do you agree? Are you feeling the unemployment pinch? Let us know down below in the comments. Otherwise, if you guys need help navigating these markets, they are going to be tricky going forward this year. We'd love to help you out. Get in the room with us. Head over to tradegenius.co and check out the specials we have listed there. There's many different types for whatever you're interested in. So you can check out the specials that we have there. All right, Bob. Thanks for watching, guys. We'll see you guys on the next episode. Take care.
See you guys later.
Trade Genius.